So the FNGR play pretty much played out exactly the way we spoke of from yesterday's analysis, right, team? So we definitely got the resistance level that we were looking for. We got the pullback that we were looking for, but however, it has not pulled back all the way to the point that I was talking about. We may have to make an adjustment to the support, but let's go ahead and validate the potentials for the coming sessions now, team. Welcome back. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with the FNGR technicals, raw price action, and statistical threat of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so we're looking at FNGR here on the hourly chart. We're going to start off with the ARQ algos, right? So these are the ones that we just refined, that we just remastered, and we have now released it, and the pre-orders are live, okay, team? So go ahead and notice right up here, when we reached that target of about 502, right, 501, right around there, we actually got a short signal printed, and the price action actually suggested a continuation to the downside. The enhanced MACD, the ARQ enhanced MACD, which is actually volatility versus momentum represented in one indicator, literally the same strategy that I talk about, right, team? That actually ended up getting a pretty nice short signal printed as well, right, team? So look at that right over there, and it's actually expanding towards that downside too, right? So what I mean by expanding is because it does cater the Bollinger Bands with a standard deviation of 1. Okay, so let's go ahead and just kind of give this its glory right here, because it did essentially suggested pretty much at the top side that we were talking about in our discretion, right? So of course ARCa got a little closer with his own discretion, but still, for this being an algorithm, for this being just a mathematical metric that has nothing to do with sentiment or bear traps or bull traps or nothing, it did suggest it pretty well. So if we did, so this ad has actually long the position from down here at about 403, right? This is the hourly time frame over the last 3 days. So it actually gave us the long signal here. So let's see what we actually made on the day, right? So we got that gainer from 403, and it had us cover right at the opening of this candle here, closing a 24.35% gainer on the last 2 or 3 days. So very, very impressive times here coming out of that algorithm, right, team? So please, if you are so interested, go ahead and reach out to us at arqindicators@gmail.com. We'll get you situated. Let's go ahead and go over to the next chart here, as there is something very important to talk about, right? So this, team, is actually one of the first charts that I ever made for FNGR about 8 months ago. Okay, team, so this was actually a macro, the start of my macro analysis, right? So what I am noticing here is that, yes, this was also known as a descending channel, right? Before it actually became this a massive broadening descending wedge. I'll show it to you in another chart, right? But yeah, this was a descending channel, and now we broke out of it, right, when we reached that top side of the 980. And upon retracing, please notice that we reclaimed the inside of the channel again, and now it has broken out. These are 3-day candles, so it's been taking some time to get there, right? So the way we get a price objective from this channel is actually just like this, right? So we take the trend line from the top side of the channel all the way to the bottom side, and we apply it to the breakout candle, right? So when we do that, this is giving us a target of about $8.42, okay? So let's just go ahead and make sure that we can keep that target in mind, just in the event to where we do face some confluence within it, right? So 842, let's draw a line across it, and go ahead and notice right over here how perfect it is to the top side of this range here from this huge squeeze that we faced, right? That was let's see how big of a move that was actually, right? So this was back in January 2019, right? So that marked off a 237% move to the upside, and we are currently finding ourselves up to that target there, literally from down here, right? So, I mean, it's just suggesting that that is the topside target. As you can see here, we're well on our way, right? So let's go ahead and now move on to the next chart and see what else we have, okay? Because, oh, yeah, right. You know what? This is the next pertinent thing to talk about. Okay, team, I know this chart is a little bit convoluted here, so just deal with me for the time being. But, yeah, if you can just remove all the price action, right, you'll see what it kind of looks like, right? These are the candles here. So, yeah, so let me just go ahead and bring up the moving averages here. So go ahead and take a look at this. This is the EMA 21 versus the EMA 55. And what we're looking at here, team, is absolutely what we've been looking for quite some time. Okay, team, this is the silver cross on a weekly time frame. The analyst, our analyst and moderator, Sebastian Lim, called this out just today, right? He said, hey, that weekly time frame is pretty much crossing. So we are right there, team. This is potentially going to cross, just like we mentioned, right? About a day or two, maybe three away, but we're just about there. This is a macro bullish cross, team, and we have to give it respects because it is crossing with both of the moving averages on an upside pivot. That is quite the different story when we're looking at moving average strategies, right? So now, if we come back to the daily time frame, I want to go ahead and take a look at a couple things, right? So let me just go ahead and block out the price action here, right? And then move up to the daily and see what our SMA 200 versus the SMA 50 are doing. Remember that we're waiting for that golden cross, right, team? So it's getting closer, but it's still not quite there. Okay, but yes, check it out, team. Here it is. This is the daily time frame, SMA 50 versus the SMA 200. As soon as this SMA 50 crosses upside of the 200, which honestly could be maybe even Tuesday or Wednesday of next week, it depends on volatility as well, right? It depends on the price action as how far it goes up. So that would essentially introduce a pretty nice, I'm just saying here that historically speaking, every asset, including the indices and the ETFs, everything reacts positively when we have the daily time frame SMA 50 over the SMA 200. That is a historical strategy and used often today. Okay, team? So let's just go ahead and put the price action right back in here and move on to the next chart. Okay, team? So you know what? I think that I could actually display the play the way it happened here. Yeah, this would be it here. Okay, so this is how we were able to determine today's resistance, right? We had a range of 516 to 542 as a higher probability area of an extreme pullback, right? So an inflection zone of sorts. So this is how we were able to determine that we would face that pullback from that area there. Now the thesis is this, right? So this is where a lot of people are starting to kind of speculate here. This is what I see potentially here. This is a head and shoulders being built, right, on a shorter time frame, right? So this is essentially why I said that there could be a pullback from this zone, right? So, and it's not to say that the next candle can't reach higher. It's just to say that I believe that this may be the spot to where we reach potential downside, right? So, but please remember to correct your psychology according to mine, right? So meaning that don't trust mine, correct yours in case you see something else that I'm not seeing, right? Because I will be wrong. I will be, I don't mind being wrong, team, right? It's just, it happens. It's the trade. This is a game of probabilities. It is not a game of certainties, right? So we have to, in fact, practice our imagination here, right, team? So let's go ahead and continue on the analysis, right? So we got that pullback very nicely from the area of about 520, 525, I think? Yeah, 525 top, which met our resistance range perfectly. Okay, at one point, the price action came back down to 460. So let's see, the low of about, 460 before a bounce to the upside, of which started to resist right from that 501 level, right? So now the price action is sitting at 482, or 486, sorry. Okay, so 486, that means that we are potentially starting to break some market structure here, right? There may be a continuation to the downside, there may not. I'm not sure, but this is the thesis right here, okay? Building that head and shoulders, right? The bears are going to think that they're going to, they're going to take over this. So that means that you can take a trend line from the top side of the head all the way to the bottom side, or where the neckline is located from the head and shoulders itself, right? Let me just make sure that I am straight. There we go. And then you can apply this to the bottom side of the shoulder, the right shoulder, right? And that gives you a target of around 174. So it's huge. The bears think that they're going to be able to have that there. Okay, but that's not the entire story here, as this the retest here that they're going to be using is going to be a massively, this is a very, very confluent target, right? So first of all, here's let me kind of further that thesis, right? I'm going to bring this over here. I'm going to bring it right next to the one that we're using. I want to see if I actually do have the chart that has the there we go. This one has it. Okay. So you can see here that we actually rejected from upside of the one spot 272, right? So But if you're looking at this from a larger perspective, meaning swing high to the swing low of the current range in a Fibonacci or in a geometric way, then you could see that we're in the process of failing the golden pocket from that time frame. So that's pretty bearish, right? But what no one is seeing here is that we have an opposition of a smaller term time frame golden pocket located between the knot 382 and the knot 618 of 435 and 410. Right, so that area there can serve as an extreme zone of a pump to the upside, okay? Because it is the golden pocket. It's very sought after, and the sentiment likes to take the trade generally to the 618 targets. You know, all in all, right, team? So daily time frame shooting star already printed, so that usually signals a continuation to the downside. So it's already favoring everything that we're talking about, okay? So now I remember earlier I mentioned that we may have to adjust that target ever so slightly. So let's see if there's anything here that can help us determine that, right? So let's load up our moving averages here and, well, maybe so. So check out the 12-hour EMA 55 and the SMA 50, right? So we're located at about 435 to around $4.15. I get it. I was already expecting the drop to be around 385 to 415, particularly the area of 410, right? So it is sort of suggesting that even still the EMA 55, right? So if that is the case, team, then we have two other possibilities to look into here, right? So it would be the EMA 55, precisely actually 416, and then the SMA 50 located at 435. So let's keep an eye on those targets, team, for a pullback here, as as that pullback is not really clear. Right, so let's go ahead and just kind of speculate on that real fast so we can get this video ended. Please notice here that this is the RSI on the hourly time frame, and we're about to face resistance from the SMA 14, right? So that's not the only area that we're going to face resistance from, though, right? So if you recall correctly, from the borders of all of these zones here, 2% up or 2% down, right? Like right here, 2% up and 2% down, those mark your gravitational zones. So if you're coming down this way, right, and you enter the gravitational zone here, very likely you get pulled to the downside. If you're going up and you face the gravitational zone here, you get pulled to the upside. So now, if you go up and you're facing yourself in this gravitational zone, you get pulled to the downside. It doesn't always happen, team, but it's there. Let's go ahead and take a look at the 3-day time frame RSI. Gravitational zone alongside the SMA 14 support, bounce to the upside. So see what I mean? It works in that manner. Take a look at here, right? Gravitational zone of the overbought percentile pulled back down. Then guess what? Gravitational zone right here from the bull weakness percentile, and then we get pulled back up. And then yet again, we get that gravitational zone and then we get pulled. And then again, this is all gravitational zones. This whole thing here. Okay, team, so we just have to watch out for that. So the reason why I'm mentioning this is because the hourly time frame could be facing a resistance from not only the SMA 14, but from the gravitational zone itself too, before a pullback, right? In which case we would start to, in which case this bi-hourly time frame would actually reach the gravitational zone right up here from the bull strength percentile, and then we would get pulled to the downside. Okay, team, so now it looks like it's a temporary drop, and we may actually still continue to the upside, maybe even tomorrow. Who knows? I was thinking personally that we can get the pullback all the way back to maybe the end of the day, maybe power hour tomorrow, and then maybe even see a continuation on Friday. But momentum is pretty bullish right now, and that's why I'm saying that we may have to adjust the targets and may adjust the time frame too, right? It's just we want to make sure that we can be as concise as possible and also as accurate as humanly possible, which you can see how difficult that can be. 4-hour time frame, we are facing that pullback here. See, this is more of a bias for my suggestion of a continuation to the downside. We're losing bull pressure here on the MACD. It's starting to curve towards the downside. And let's see the 30-minute time frame. 30-minute time frame is already corrective with an upside. Hourly time frame barely facing it, but we're still within the wave of the bi-hourly, the 3-hour, the 4-hour, and potentially the 6-hour, right? So we have a short-term pullback relative to 4 hours, right? So remember that we only have about 8 hours in a trading day, traditional hours, right? Of course, there's still post-market and pre-market. To keep into consideration here. But yeah, maybe by the end of the day tomorrow, we can actually see a bottom side target here. Okay, it seems so just remember the targets that we spoke about. And and then we'll move on, right? It's our jobs to react to the price action, not so much as predict it, right? We can only forecast it, and using the advantage of knowing how to read charts proficiently, okay, team? But I must urge you to please remember to not take anything of what I say here. Do not take anything of what I say as financial advice. Please use these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, okay, team? I need you to do your own due diligence, and everything will be cool. But with that said, I wish you well, a very good night, and I'll catch you at the bell mañana.